Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody guys. In the second today's video, let's take a look at the Japanese yen again, just to complete our discussion of the double repo pattern that right now we could say it has been formed, has been confirmed on the daily chart. So major background for this trade, for this pattern, mostly technical, since fundamentally suggested further stimulus and inflows in the United States economy leading to the growing inflation and interest rates more suggest the attractiveness of the United States dollar. And in an opposite direction is standing the policy of the Bank of Japan. So to make the economy weaker, they just can't trigger the inflation for 2 decades already. And in general, this most fundamental background stands not in favor of Japanese yen appreciation, but technically in the short-term perspective, retracement could happen. And major points we have discussed yesterday. So Japanese yen stands at overbought on the monthly chart and on the weekly chart. And as we said yesterday, that if market is overbought on the monthly chart, retracement could lead market to the oversold condition on the lower time frame on the weekly. And oversold on the weekly stands at 110 approximately, so precisely the target of the double repo. It's 50% support of the whole thrust of the double repo pattern. So that's why, besides for the monthly chart, the retracement for 6 points, it's not really big distance. So it's normal reaction on the overbought condition. That's why we think that it could happen. Besides, on the daily chart of the euro currency today we have discussed, we see that some extended pattern could be formed. I mean, bullish reversal pattern for the euro currency, since it could be would lead to the corresponding to the Japanese yen bearish retracement. And it's not necessary that this pattern will definitely work on the euro currency, but euro will definitely spend 2-3 weeks to form it, and that will be enough to make the double repo pattern to be completed on the Japanese yen. So shortly speaking, there's chances that this double repo will be completed. It's not really small. They exist in the market. Today, guys, we will be watching for a non-farm payrolls release that expected to around 178,000. ADP report has shown slightly worse numbers, but currently, guys, the situation stands so around the job market in the United States that you should pay attention not to the numbers directly, but to the components of the non-farm payrolls list, because since this pace of the non-farm payrolls very, very strong in the recent years, so that they created approximately 150,000 each month. And right now, market is strongly saturated with the jobs, and it has not just the capacity to create the job places at the same pace. That's why some worse numbers than expected, and that's decreasing of the non-farm payrolls pace will not mean that the economy turns to recession, but it just will mean the saturation of the job market. And that's why if even you will get to these slightly worse numbers, not 178, but you go 160, 165, this will not mean that this is bad data. So just pay attention, be careful, and pay attention to the wages, because currently market will take a look at the growing of the wages. So because changing on the wages, it means inflation is growing, and if growing on the wages will show the greater pace, and the inflation is growing faster, that will be treated as the positive report, despite if numbers will be slightly lower than expected. So that's the current situation with non-farm payrolls release. So be careful if you're trading the non-farm payrolls release. So speaking on technical subject, so you can see that Japanese yen has dropped significantly, close below the monthly pivot point, shows the existing of the bearish sentiment. And right now it's turning to some upside retracement. Guys, currently, as you can see, the price stands very close to the daily oversold. That's why if even Japanese yen will start drop today, hardly it will drop too significant. Maybe it will reach the weekly pivot support, but we should not count on the possible drop where too significant, maybe to 110 area or even 112. Hardly this will happen. Probably market will just show the reversal here and drop to that area if non-farm proposal will be supportive and if double ripple will not fail. Just keep in mind that if you will not see the very strong pace to the downside, just you should understand that this happens not because of the weakness of the patch from something else, but just the existence of the daily reversal very close to the current price. That's why Japanese yen just can't break through it freely, so it will be held by the oversold condition. So on the 4-hour time frame chart, we see some upward bounce. Here market is retesting the monthly pivot point and has reached this confidence resistance 116.12, 116.40 area. So if you would like to take the position based on this double ripple, probably this is an area where you could do this. If of course you do not worry for non-farm payrolls release and coming volatility, and that you could be just wash out from the market on some spikes and so on. So personally, guys, I do not trade the markets during the non-farm payrolls release. So, but pure on the technical picture, that's an area suitable for taking the position. When the double ripple has been confirmed, minus rate retracement is sufficient and very good setup for taking the position if you would like to trade it. The level that we should watch for, according to the Judd Napoli framework, Judd Napoli is the person who's invented the double ripple pattern. So we should watch for this level, 117.25, because double ripple is treated as valid pattern until market will not move above this area and will not close above this level. So by today close, we need to watch what will happen. If market will move above it and close above this area, the double ripple will be treated as the failure pattern. That's what is suggested by the Judd Napoli framework, how he invented this pattern. So that's all that we could say about the Japanese yen. As double ripple has been confirmed, right now we're watching for downward continuation and how it will work, or maybe it will turn to the failure pattern, something of that sort. But taking in mind, guys, situation that we have on the gold market, on the euro currency, it still seems that some downward continuation will happen here. I'm not sure what volatility will come on the market today, but in perspective, the chance that Japanese yen will drop lower still exists. So let's see what we will get.